Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Thursday, September 18th. Mention the month of October to an investor and you'll likely see them cringe. Etched into their memories is the fact that the stock market suffered tremendous crashes in the month, 1929 being the most prominent when the Dow plunged 23.6% from its close on October 25th to its close on October 29th. The biggest single-day October meltdown, though, came in 1987, when the Dow plunged 22.6% on October 19th. That was followed with an 8% decline on October 26th. 10 years later, there was a 7.2% decline on October 27th, 1997. Of the 20 biggest one-day percentage losses for the Dow in its illustrious history, 8 of them, or nearly 50%, have occurred in October. The smallest of that bunch was a 6.9% decline on October 13, 1989. According to the Stock Traders Almanac, though, the month of October served as the inflection point in 11 post-World War II bear markets. Looking at the latest example, October 10, 2002 marked the low for the Dow when it hit 7197.49 in the wake of the internet bubble popping and the 9/11 attacks. 12 months later, the Dow was up 34.4%. That low, incidentally, ended up marking the beginning of a 5-year bull market. In a coincidence or not, the bull market peak was reached on October 11, 2007. At its peak, the Dow was up 97.3% from its October 2002 low. Investor psychology heading into October is typically frayed for 2 reasons. First, contrary to popular belief, it is September, not October, that has been the worst month on average for the Dow and S&P since 1950. The average percentage change during that span, according to the Stock Traders Almanac, has been minus 0.6% for the S&P and minus 1% for the Dow. The performance holds true for the NASDAQ, too, with an average decline of 0.9% since 1971. This September certainly hasn't done anything to change that ignoble position. The theory advanced by the Stock Traders Almanac for the week showing in September is that portfolio managers tend to clean house after Labor Day and get active with end-of-quarter portfolio restructuring. With the week's September history, then, nerves are already frayed going into a month that is the mainstream media's favorite month to obsess over when it comes to stock market history. Only the emphasis in the media with respect to October is inherently negative. That's not intended to be a knock against the media. The facts are the facts. October has produced some nasty sell-offs, but when investors are dealing with weakness in September and get consumed by negative reminders of October's infamous track record, it creates a fearful mindset that leaves won't be the only thing falling in October. The irony here is that October has been the best month for the Dow and S&P over the last 10 years, according to the Stock Traders Almanac. That standing may be owed in part to relief that sets in that there hasn't been a major meltdown. More likely, though, it is a function of traders and investors front-running the historic track record that shows November to April is the best 6-month period for the stock market. I'm Pat O'Hare for Briefing.com. Thanks for listening.